Hi, I wanted to talk to you all a bit about some of the reasons why I got into precious metals. And I wanted to highlight some of the long-term trends that I think are much more significant, not so much the small things that are happening. At the moment, there are very many different things happening, and it would be way too impossible to follow all those things individually. But I think if you take the opportunity to look at a long-term trend, then it becomes more and more clear where silver and gold, other precious metals, where oil is going to go, what's going to happen with China and interest rates and all these other things. So I just wanted to take the opportunity to just look at it a little bit, some of those things more in depth than others. So, first of all, I wanted to talk about interest rates. Okay, so the Fed raised interest rates. I was really quite surprised actually. I didn't think they'd do it. I thought they'd just talk about it but never actually get it done. But I mean, given the current state of the US economy, so let's see, GDP growth rate 0.7, unemployment rate 5%, inflation rate 0.7, interest rate 0.5, and government debt to GDP 103%. So, I mean, that's quite bizarre. I mean, they looked at that information and thought, right, now's a great time to hike the interest rate by 0.25. So let's look at the Dow Jones Industrial Average, one of the most closely watched US benchmark indices. And it becomes apparent that, okay, it's hit a all-time high of 18,000, but it's starting to look like it's going to go the other way. Given the fact that the Fed is now increasing interest rates, it doesn't look likely that that's going to go any other direction than down. Okay, but what's really scary is if you take it back to, say, 1987, and what you see is that the index oscillates, and with each oscillation, the highs are higher and the lows are lower. And that's the reason why I think that the next oscillation is going to be really deep and really low. Here's the S&P 500, and you can see as well, it's a little bit more pronounced at the top, but it is headed down again. And if you take it back to 1994, then it becomes clear that they're both following their cycles. And this cyclical nature, I think that's what's going to get us into trouble. Okay, and then there's crude oil as well. So crude oil at the moment is going at 32.7, Brent crude 35.0, natural gas 1.9, and gasoline at 1.0 US dollars. And in terms of production, let's see, Saudi Arabia 10,144 barrels, Russia 10,140, so very similar. The United States 9,347, Iraq 4,275. So there's no stopping. The production is very, very high still. So that's very deflationary. I'd also like to quickly look at China because China is central to all commodities, manufacturing, and the global economy as a whole. Their currency has been weakening against the US dollar, and you can see that their growth has also slowed down tremendously. So also linked to China is copper, directly and indirectly, because copper is usually a very good thermometer of the global economy or national economy. And as you can see here, the price is plummeting. So all in all, it's all deflationary. So here's a chart showing China's gold reserves. As you can see, they've been periodically buying more and more gold, which I think is very, very interesting. So going back to the Fed, I think it's obvious that their stimulus has really helped the financial markets. And that's obvious if you look at the charts like the Dow Jones Industrial and the S&P 500. You can see that. And then on contrast, when you look at the commodities markets, everything's been sinking. But now with the interest rates rising, that's going to change around. I think the financial markets are now going to start suffering, and commodities now will start either to bottom out and gradually change around. Gold and silver especially well placed at the moment because there's recently been a slight rise in the price of gold. And if you look at it long term, gold and silver have actually performed really, really well.